going to talk about in this video is combining AMD or the box setup with the change in state of delivery or an order block formation. Now I posted on my community tab this post, and so we're going to go over this example. So if you notice right here, we have some sort of range, but let's wait for the manipulation before we identify that. So here we get the manipulation as we have an aggressive move out and then back into a range. So going ahead and marking out this consolidation or accumulation. And we'll also mark out the highest body in that accumulation as that is the box setup. And we'll mark out the deviation from this range or the manipulation. Generally, the box setup is a retest of these previous highs over here. I stop there. And then looking for targets. Well, how can we get targets? We can project out this manipulation leg and look for that. So this would be the normal box setup. However, if I want confirmation, let's see what we would do. So when price comes back up into this area, instead of immediately taking an entry, I'm looking for a formation of an order block or a change in the state of delivery right here. So you can see we have a high here that gets swept. And then where is the series of up close candles that made the high? Right here. And you can see price already closed below the opening price of that, validating it as an order block. So then I can look for an entry here. And then I can decide. I can either put my stop here or up here. In this case, I'm comfortable putting my stop here as we had a sweep. And then I can look to target that original projection. So let's see how this works. And there we go. Here we are building a range as we cannot make new highs or lows. So marking out the lowest bodies in that range. And I'll go ahead and mark out our accumulation, our manipulation. Now we want to see this displaced back into the range, which it does. Now, if I'm looking for a box setup, my original entry would be on a retest of this line here, my stop on this low. However, let's wait for an order block formation there. So you can see we have a down close candle into that area, into the fair value gap. So then I'm looking for a close over this candle. Here we get a close over this candle. So then I will be looking to enter along there. And then I can either put my stop on this low or here. Right here, I would have my stop on this low, and then I can project out this manipulation for a target. And in this case, looking for a previous high here or this fair value gap that lines up with the first standard deviation. So we'll just go here. And there you go. So that is the example from the post, and I hope that makes sense and that it gives you something to study. I hope you found this video helpful. If you did, please consider liking and subscribing. And if you want to see a more in-depth video on that entry model, please let me know in the comments below. Accumulation is a range or a consolidation. Now what this does is creates buy stops above old highs and sell stops below old lows. Now when we enter manipulation, it is a false breakout outside of this range. What this does is stops out any longs entering during accumulation, as well as induces breakout sellers into the market. Then price distributes higher and completes that power of 3. So you can see here, accumulation manipulates. So what this does is induces breakout buyers and runs shorts out of their positions, and then distributes lowers. So let's go ahead and overlay this on the last example. So here you can see we have accumulation, manipulation, which stops out anyone long in here, as well as sellers are going to enter the market playing this breakout, and then price reverses and distributes higher, creating the daily range. Similarly, down here, price is consolidating, any early shorts get stopped out, any breakout buyers enter the market, then price reverses and distributes lower. So how and when do I look for entries using the power of 3? Well, there are two ways I look for entries here. The first would be within the manipulation. I'm going to be looking for reversal patterns here in the manipulation, looking to catch this whole distribution. However, if I miss this or do not like to trade this, I will be looking for a continuation entry in this distribution. So going back to our example here, for these longs, I could be looking for a reversal here within the manipulation, or looking for a continuation pattern here, looking for higher prices. Similarly down here, I could be looking for sells on this reversal here, or looking to trade this continuation lower. How's it going, everyone? This video is going to be over the box setup. If you haven't seen my first version of this video, it'll be linked in the top right hand corner. However, I'm going to go a little bit more in depth in using this for entry as well as bias. The box setup is when we have some sort of resting liquidity, generally in the form of an old high or low, and we get an aggressive move out of the range and then back into the range. So looking at this initial range, I'm looking for a retest of this high of the range for a reaction, and at the low, a reaction off of this previous low. Another way to look at this is the deviation from our range, or over this old high. I'm looking for price to reach back into this deviation for a reaction, and here at the low, same thing. Now, how do I manage my risk in this scenario? I'm looking to take an entry when we retest this deviation from the range with my stop on the current high, and then targeting whatever liquidity we have below. So over here, it would look something like this. Looking at a few more scenarios here, we have a consolidation range, a deviation, and then a retest of that deviation right there. And it looks about the same for each scenario. Now, the most important part, or what I focus on the most, is this move out and back into the range needs to be aggressive. And I will show that in some examples. And before we get into the examples, you may notice this looks exactly like power of 3 or accumulation, manipulation, distribution, and that's because that's what it is. Here would be the accumulation. We have our manipulation marked out, and our distribution would be when price moves away from the manipulation and goes lower towards the range low and whatever is resting below. For this first example, you can notice we have a range high and a range low right here. And one thing to point out, I generally mark out the bodies for this setup, so that is what I'm going to be using. Now that we have those marked out, let's see what happens when price leaves the range, if it does. And you notice we get an aggressive move out of the range, so to fulfill the requirements, I need an aggressive move back into the range. And that is an aggressive move back into the range. And the reason for needing the aggressive out and then back into the range is this is what forms the wick on a higher time frame. So now what am I looking for? I'm looking for a return to this area right here, or this previous high, my stop on this high, and then I'm looking for the other side of the range, preferably. So watching this, here we go, we get a move back up to this high. Now I want to see a move lower. And there we go, we get a move lower. So cleaning up the chart a little, where was our deviation from the range? Right here. And then when did we retest the deviation? Right here. And a quick side note, if you haven't seen my previous video on inducement setup right here, with this high being ran and closed back below, I will link that in the top right. In this next example, we have a low right here in a downtrend. I'm expecting this to be ran. Here, you notice we get aggressive down and aggressive right back up. And like I said, I generally use the bodies on this. So I'd like to see this support price to go higher to this side of the range. So if I was looking for this setup, it would be something like this. Letting this play out. And there we go. And just taking a look at where the deviation from the range was, let's go ahead and mark it out. Here was the deviation from the range, so aggressive out, aggressive back in, and then this old low supports price. Now, if I'm struggling to identify a range, what do? I personally just wait for displacement over highs. So if I'm looking right here, and I don't see any range that I like as a consolidation range or just a range in general, I just wait. Here I see an aggressive move up and then back down. From here I look left, which highs were ran? Right here. So I mark out the highest body. Now we get a close in, and from here I would want to see price reach from here to the other side of the range. Letting this play out, it retests that level and then goes lower. Now what do I see on this side? Well, I just had a low. I had an aggressive move below, back into the range. So now I would want to see price reach back down to this previous low, to then go reach for the other side. So let's see what happens. And there we go. For this next example, it's pretty easy to see we have some highs right here, and we are within a range. However, even if we didn't know that, let's see what happens. You get displacement up. Now, if this wasn't to displace back in, I would not be looking for shorts. However, what happens? We get an aggressive displacement back in. So what am I looking for? I go to the displacement, I look left, which highs were ran. I will use the highest bodies, and then I am looking for a short setup right here, a stop on this high, and then looking for the other side of the range, or in this case, I'll just go for 2R before runners. And there we go. We get the move, and you can see how this dropped back down. And if we let it keep playing, you can see that would have given just over 5R. In this next example, I'm going to show you a scenario when I would use the wicks as my low instead of the bodies. So if you look right here, we have a low put in. We get a very aggressive move down, and now we get an aggressive move back up. If I was to use the body here, my level would be right here. And so for this case, I would prefer to use the wick right here. And there we go. We get a nice tap of that before moving higher. Using the box setup for bias, I generally focus on the 4-hour or daily time frame, and I just follow the displacement, as well as look for deviations from the range. So for example here, we have an old high over here, marking out this body. We get a move higher, nice close above, before an aggressive move lower, and then retesting that, so marking out the deviation from the range. It looks something like so. Similarly over here, we have this low right here, deviation from the range, and that is how I get my bias, especially with range trading. Now if I go out to the daily, this is when I generally will focus on just the wicks, like so, and then I will look for the deviation from the range on this time frame, and then use the lower time frames, such as the 15-minute, to go look for setups in here and in here. I hope you found this video helpful. If you did, please consider giving it a like. I'm going to be over standard deviation projections and combining that with accumulation, manipulation, and distribution. Now, if you haven't seen my videos on the topics, I'll go ahead and link those in the description below, and I'd recommend watching those prior to this video. But other than that, let's hop into the PDF before some examples. So a brief review of what accumulation, manipulation, and distribution is accumulation is essentially some sort of consolidation, manipulation is a fake breakout or the false move, and then distribution is the real move in the opposite direction of the manipulation. So looking at a candlestick chart, we have some sort of consolidation or accumulation, manipulation, which is the move or the fake breakout, and then we have our distribution. So zooming in on these candles here, you can see we have accumulation, manipulation, and then distribution. And with projecting this out, we want to focus on the manipulation. Now, where is the manipulation we're focusing on? We want to see the leg that made the low before the high. So essentially the breaker formation as well. So from here, we'll take the high to the low and project it out, and those will give us targets for the distribution. So putting it all together, we have accumulation, manipulation, and distribution, and we project this manipulation leg, giving us targets for this distribution. So here we are with our first example. We'll walk through the price action, projecting out the manipulation, as well as a few possible entries. So you can see here we create equal highs. So let's see what happens next. You can see we start to get this consolidation here. So I'll go ahead and mark that out here. So we get an aggressive move over this buy-side liquidity pool. Now, if we want this to be a manipulation, what do we want to see next? We want to see displacement back into the range and breaking structure or changing the state of delivery. Or if you've seen my box setup, aggressive out and aggressive back into the range. So let's see what happens next. And there we get aggressive displacement down. If we weren't to get this aggressive displacement down, then it's likely to continue higher. So let's go ahead and mark out our manipulation. So here is our manipulation, and if we mark out our change in state of delivery, it would be right there, and our market structure shift would be right here. So now that I have this marked out, how can I combine this with standard deviations? Well, I'm looking to project out the manipulation leg. So I look at the manipulation. Where is the low that made this high? Right here. So I'll go ahead and project from this high to this low. And now I have projection targets. So zooming out a little, the first thing I want to look for is the -2 to 2.5 standard deviations, and then the fourth standard deviation. So how would I look to take an entry here? Well, I could enter on the change of the state of delivery or this order block, or look for the fair value gap. Considering they are in the same spot, I'll look to take my entry there, my stop on this high, then my first target will be the -2 standard deviations. So there we get tagged in, and we reach lower to that -2 standard deviations. Now, if we're going to continue lower to the fourth standard deviation, I'd like to see price respect these up close candles here, which is an order block. So let's see what happens there. So price is respecting it. We get an extra little sweep there, but you notice how the bodies don't reach over this. Now let's see if we get a continuation lower to this fourth standard deviation. And there you can see we hit the fourth standard deviation. So just to quickly review, we have equal highs here. We have accumulation or consolidation just below these equal highs, an aggressive move out and back into the range, which shifts structure as well as changes the state of delivery. Then we retrace back into the order block as well as the fair value gap here, and then get displacement down to the 2 to 2.5 standard deviations, a retracement back into up close candles or an order block, before a continuation lower to the -4 standard deviation. I had many requests for this video to combine the box setup with AMD and the projections, so in this example, that is what we are going to be doing. So if you notice here, we are starting to consolidate. And here we just focus on aggressive move out and back into the range. So even if you don't see this as an aggressive move out, we get an aggressive move back in. Now we can go ahead and identify our consolidation. And for the box setup, I use the bodies. So you can see this is where I'd mark out the consolidation. Our manipulation would be anything over these bodies here. And then I'm anticipating distribution. Now before we get any further, I want to project out that manipulation leg. So going from the high, where is the low that made the high? So from right here, I can go to this low here. And the reason for that low is we have a green candle that went up, red candle down, then up again. So this is a swing low on a lower time frame. So now that we know this, using the box setup, what I do is grab the highest bodies, extend that over, and that is my entry. Using that as my entry, I want to put my stop on the manipulation high, and then look to target that second standard deviation. So let's go ahead and let this play out. So here we get some more consolidation. Aggressive move up, so that would be the entry there. You can see retesting those previous highs. And then we get our aggressive move down. And hitting our second standard deviation there. So cleaning it up a little, you can see we have accumulation, manipulation, and then we retest these previous highs or the previous high of the accumulation or consolidation before our distribution lower. So watching this play out a little more, we are in our -2 to -2.5, which is our retracement or reversal area. So here we do get aggressive down and then back up, but it never took anything, right? No sell side liquidity. There wasn't really any consolidation here. So let's let this continue. Here you can see we start to have some consolidation. We're building lows and highs. So marking out those lows and highs, that is a box. And here we get an aggressive displacement lower. And then we get displacement back into the range. So this is manipulation, or a deviation from the range. So marking out our consolidation, we have it right here. And then ideally looking to take an entry at the retest of this deviation from the range, right there. And then where can we get a target? Well, we have an aggressive move down here with an imbalance. So if we go ahead and project this manipulation leg out, we have this -1 right here that lines up perfectly with the start of this fair value gap. So we'll go ahead and target that. Now, one thing I look for, if I am not confident in this entry, what I'll look for is a down close candle into this area that then gets closed over, validating it as an order block. And then I can look to take an entry right here, my stop on the order block low, and target the same area. So it looks something like this. But either way, you can see how that worked out. We reach into that fair value gap that lines up with the -1 standard deviation, but hopefully this shows you how the box setup can be paired with standard deviation projections as well. In our last example, we are going to take a look at the AMD between sessions. Generally, I like to see Asia accumulate, London manipulate, and then New York distribute. So we are getting near the London session here. What did Asia do? It accumulated or consolidated. So marking out this range here as our consolidation. Let's see what happens as we move into London. So here in London, you notice we get an aggressive move out of this range, sweeping this low. So if this is going to be manipulation and we want to see a move to the upside, we want to see aggressive displacement back into the range. If this is going to continue lower, we want to see a retracement before moving lower. Here we get aggressive displacement back into the range. So now what can we do? Well, we have a new low. Where is the high that made the low? Let's project that out. So from this low to this high, we have our projection. So looking at this, what can we see? We look left, right before the -2 standard deviations, we have a failure swing, and then we have this high resting in here. So those are ideally the target for this move. So now that we have our London manipulation, let's go ahead and mark that out. And let's see what happens as we move into New York here. Here you can see we retest this breaker here. And then we get displacement up here. And now just prior to New York, what do we have? Well, we have a fair value gap here. So if I was going to be looking to take an entry, I could look for an entry in here, my stop on this low, and then ideally I would be targeting this failure swing here, as that would be the low hanging fruit. So let's see how this works out. And there you go, price delivers to the low hanging fruit as well as this old high over here. And just to review what happened, we have Asia accumulation, London manipulation, and then we expect distribution into the New York session, which delivers to these old highs, as well as hitting the -2 and -2.5 standard deviations off of the London manipulation. I hope you found this video insightful. If you did, please consider liking and subscribing. How's it going, everyone? This video is going to be over standard deviation projections. Standard deviation projections can be used to find targets, areas to expect retracements or reversals, as well as a confluence to an existing strategy. This video will be focused on the settings of the Fibonacci, which price leg to project, which areas to look for a retracement or reversal, what to expect after hitting max expansion, as well as pairing with PD arrays and overlapping existing projections. So let's get into it. So the first thing we are going to go over are the fib settings. So if you see here, we are using a fib retracement tool on TradingView. And the settings we have here are 1, 0, -1, -2, -2.5, and -4. And if you specifically want to see the color I'm using, it is right here, and my background is very transparent. I have my values on the left side in the middle with a font size of 10. So now that we have our settings, let's get into how to anchor this Fibonacci retracement tool. So here's an example of what the Fibonacci tool will look like once it is projected out. However, where do I anchor this Fibonacci tool to get these projections? And that is what we are going to go over next. So when price creates a smart money reversal or a reversal pattern, so for example here, price is trending up, makes a high, low, higher high, lower low, I'm going to look for the manipulation leg. And that manipulation leg is the swing that swept liquidity before changing the state of delivery or shifting structure. So for example here, this low to this high that swept liquidity, that will be the manipulation leg. I then take my projection tool or my Fibonacci retracement tool and project this out such as so. So let's get into the charts and look at a few examples of projecting these out before we get into the rest of the PDF. So here we have price action trending up. Let's see if we get a smart money reversal. And here you can see we get an aggressive price action out and then back into the range if you've seen my last video on accumulation, manipulation, and distribution. So where is the price leg that made the new high before the new low? And so from this low to this high, that would be the manipulation leg. And so projecting that out from our high to our low, you can see we get our projection put on the screen here. So let's go to a few more examples of just projecting this out. So here we have price kind of consolidating. Let's see what happens. So we get an aggressive move out and then back into the range, changing the state of delivery. So where is the manipulation leg or the leg that made the new low before the new high? So from right here at this high to this low, that would be the manipulation leg. So projecting that from our low to our high, we have our projection. So here we have price trending up. And there we go, we get a sweep and then displacement down. So take a moment, where is this manipulation leg? So you can see price from this low made a new high before displacing down. So our manipulation leg is from this high to this low, or from this low to this high. So then projecting it out, I go from this high to this low and have my projection. So now that we have practiced identifying that manipulation leg and projecting it out, let's go back to the PDF and see what we are looking for in these projections. So here we are back in the PDF, and although there are many ways to use these projections, we're going to focus on the -2 to -2.5 and the -4 as areas of interest. So when price reaches the -2 to -2.5 standard deviations, I'm looking for either a retracement or a reversal from this area. If price displaces and closes through this area, then I'm looking for the max expansion or the -4 standard deviation. Once hitting max expansion, what I can do is mark out a discount and premium of this leg here and look for price to retrace to an equilibrium. The next thing I want to talk about is pairing these standard deviations with PD arrays. For example here, the -1 has a fair value gap lining up with it, and then the -2 to -2.5 has sell side liquidity resting between them. I personally love to use these projections and then see if it lines up with equal highs or a fair value gap or some sort of PD array. So let's go back into the charts and look over these concepts. So here we are back with our first example. Let's go ahead and mark out these areas and then look to see if any PD arrays line up with them. So marking out the 2 to 2.5 standard deviations, as well as the fourth standard deviation, let's see if any PD arrays line up in these areas. So if you notice, we have sell side liquidity resting here, as well as here. Because this is just right above the -2 to 2.5 standard deviations, I consider this the low-hanging fruit. Then we can mark out the sell-side liquidity resting within this area here. So let's see how this plays out. And another thing you can do is when we get another manipulation leg, such as here, we can also project that out as well and get matching confluences. So you can see how the -1 here overlaps with the -2 to -2.5, and the -2 to -2.5 here overlaps with the -4 standard deviations. So let's go ahead and continue these out and see what happens. So you can see we hit this low-hanging fruit and then get a little retracement. And here you can see we don't quite take those lows, but we do reach into the middle of this area. And now, if you've noticed, we are into our second example, as we have a manipulation leg here. And so let's go ahead and project that out. And so now if we are looking, what do we see? Well, we see we have a -2 to -2.5 here. Go ahead and mark that out. And then we have our -4 right there. Are there any PD arrays that line up in here? Well, we do have this order block here. If we mark out the mean threshold of that, it'll be right around the 2nd standard deviation. We went ahead and marked that out, and then we have all these equal highs resting above here with the 4th standard deviation. So let's go ahead and mark those out as well. So let's let this play out. And there we go, we reach into that 4th standard deviation. So let's clean up the chart a little bit here. So letting this continue to play out. And there you see we get to our 3rd example. So let's go ahead and mark out this manipulation leg once again and project it out. Let's see what happens here. You can see we hit our -1 standard deviation and currently getting a retracement. Let's see if we reach into the -2 to -2.5 or the 4th standard deviation, and do we have any PD arrays lining up with those? Well, looking left, we have a fair value gap right here, so we can go ahead and mark that out. And generally with a fair value gap like this, I'd be looking for the near side here as we have equal lows. But we can also mark out the consequent encroachment of this. And then the next thing, looking left, our 4th standard deviation lines up pretty closely with these lows right here. So those would be my 2 objectives for this market maker sell model. So here you can see we reach into the -2 to -2.5 standard deviations. We get a retracement here. And then finally we come down and hit our 4th standard deviation here below this low. So let's go ahead and zoom out here and see how this all worked out. And you can see we still have some projections down here. So let's skip ahead and see if price ever reaches those lows. And you can see here, price does sweep those lows, but we still have this 4th standard deviation, which is aligned with our 2 to 2.5 right in this area. And there we go. And if you notice, we have another manipulation leg here that we can project out. And you can see we hit into our 2 to 2.5 standard deviations there. Now price is starting to trend up. Looking where is our manipulation leg? Right here. So I can project this out. We have our 2 to 2.5 right here. And now we are in that 2 to 2.5 standard deviations. So sorry for the little bit of a mess here. Let me clean this up. So I hope in this example you saw that I can project manipulation legs out to give me targets. Using PD arrays, I can add to those targets. And then using multiple projections, I can add to the confluence. For example, when the -4 from one projection lines up with the -2 to -2.5 of another projection. So let's take a look at one example of this going top down and how you can use it on multiple different time frames as well. So here we are on NQ daily chart. And if you can see, price retch up into this daily fair value gap on a Tuesday, made a reversal, and then the next day expanded lower and displaced below these lows. Anticipating a classic sell week with a Tuesday high, I'm anticipating Thursday to continue lower. So with that idea in mind, let's go ahead and drop down to the hourly chart. So here we are on the hourly chart, and this is the daily fair value gap here. Where is the manipulation on this time frame into that daily fair value gap? Well, here is the high into that fair value gap. Where is this swing or the low that made that high? Right here. So from here to here, that is our manipulation. So projecting that out from high to low, let's go ahead and zoom out here. So marking out Thursday right here to right here, we could anticipate price reaching into the 2 to 2.5 standard deviations right here. And another thing you can do is mark out the consequent encroachment of these standard deviations. So if we're anticipating price to move lower into this area, let's drop down to a lower time frame and see what happens. So down here on the 15-minute chart, we'll go ahead and get into London session. We're going to go ahead and mark out our midnight open here, and let's see what happens. You can see Asia consolidation. London moves aggressively lower, and then back into the range, accumulation, manipulation, so anticipating distribution. What do we have over here on the left side that is interesting? Well, we have equal highs resting here. So let's see what happens here. You can see we just sweep a low here, continue higher, and there we reach into those equal highs. Now, since London is retracing in terms of the weekly profile, I'm anticipating New York to move lower into this 2 to 2.5 standard deviation area. So let's drop down to a 5-minute chart. So as we near New York open, let's see what happens. And here on New York, you can see we get a big wick up and wick down. So let's drop down to a lower time frame to see what that looks like. So down here on the 2-minute, nothing really interesting towards the downside yet, but I am going to mark out this order block here and see if it forms. So here we get displacement below this order block and this wick here. So looking at this price action here, where is our manipulation? So you can see this is the leg that made the new high, and where is the low of that leg? Right there. So that is our manipulation. So projecting that out from our high to our low, there we have our projection. Now, the next thing we want to look for is, do we have any PD arrays lining up with those projections? So looking left, what do we have resting just above -2 standard deviation? We have our London low. So that would ideally be the target for this, as it is a low-hanging fruit. Let's zoom back in here and see if we can find an entry. Now, the first entry I would be looking for is a retest of this order block here, with my stop on this high, and then I'd be looking to target those London lows. So let's see if that takes me in. It does, and we start to get our distribution lower. And you can see we leave equal lows here, and we start to get a retracement. So marking out these other up close candles here, let's see if those provide a reaction. It does, and then we go in, we hit our London lows. So just to review what happened here, we have a classic sell week, so anticipating expansion into Thursday. We drop down to the hourly chart, we find the manipulation on the hourly chart and project it out, which gives us our overall target of this yellow box here, which let's see if that hits. And it does reach into there, and the consequent encroachment of that. Now, the next thing I did was drop down into the lower time frame, look at the daily profile, and then find an entry targeting those London lows. Now, I hope you found this video helpful. If you did, please like and subscribe. I am planning on my next video combining my previous video with this video, so an accumulation, manipulation, and distribution combined with standard deviations. If that is something that interests you, please let me know in the comment section below. And other than that, I'll see you guys next week. How's it going, everyone? This video is going to be over the change in stated delivery. We will first go over the PDF to learn what that is before going to the charts and finding some examples. At the end, I will combine it with standard deviations and AMD to create an entry model. So here we are in the PDF, and what is the change in stated delivery? Well, the change in stated delivery is when price goes from bullish to bearish or from bearish to bullish. Now, let's go through this example here. Price is moving up into a higher time frame PD array or important level. This up close candle here gets closed below here, and that is when the change in stated delivery occurs, when the opening price of this up close candle or series of up close candles gets closed below. After being closed below, I can anticipate price to trade lower. Similarly down here, price puts in a swing low, raids the sell stops, and then closes over the series or single down close candle, changing the stated delivery. When price returns, I can anticipate a reaction to trade higher. Now let's take a look at two more examples. Now when there is more than one up close candle or a series of up close candles, I use the opening price of the first candle. So I will look for this price to be closed below, and then when price returns, I can anticipate it to trade lower. Similarly down here, there are 3 down close candles into the important level. I will use the opening price of the first candle as my change in stated delivery. So let's go into the charts and look at a few examples of this. So here we are with our first example, and I'm going to go ahead and mark out our buy side liquidity resting above these old highs. I'm then going to drop down to a 5-minute time frame, and here we are just before New York open. Let's go ahead and watch and see what happens. So you can see price displaces up over this high and then displaces back into the range. Now I generally prefer a lower time frame sweep with my entry models, but we'll go ahead and mark it out without one. So what I'm looking for here are the series or single up close candle that made the new high before displacing and closing below. Now where would that be? Right here we have 2 candles that made the new high before the displacement down, and I'd want to see a close below here. So you can see price is failing to close below this level. And then now we get a new sweep of a high. So now where would I look for price to change the stated delivery? I'd want to see price close below these series of up close candles here. And you can see price does close below those candles. Now that we have changed the stated delivery from bullish to bearish, I can be looking for price to trade lower. Where is lower? Well, we have London lows resting below right here. So with that idea in mind, I could be looking for price to retest the order block with my stop on the high, targeting these London lows. Now since this is 1.66R and I generally prefer a minimum of 2R, what can I do? Well, I can take what we learned in the previous projection video, project out this manipulation leg, and then look for the -2. So letting this play out, let's see what happens. You can see it tags the order block, respects this fair value gap in here, and now price trades and closes below this candle here, which is now validating it as an order block. And there you go, we hit the -2 to -2.5 standard deviations. So just to review, price goes, sweeps an old high, then displaces down. However, this can't change the state of delivery. We get a lower time frame sweep, which changes the state of delivery, and then we can anticipate price to trade lower to London lows and the standard deviation projection. From here, I look for an entry model to gain entry into the move down. So let's hop into the next example. So in this next example, we are going to work top down from the daily and how you can use the change in state of delivery on multiple different time frames. So you can see here we have a daily fair value gap right here, which would be the drawn liquidity. Here you can see price reaches up into this fair value gap, respects it, and closes down. Using the next day model, we can anticipate price to move lower the next day, taking out previous day low. But let's hop into the hourly chart to confirm this bias. So here we are on the hourly chart, and ideally we want to see a change in the state of delivery after engaging our higher time frame PD array. Well, here is our daily fair value gap or our higher time frame PD array. Do we get a change in the state of delivery after engaging with it? We do, as we displace and close below the series of up close candles here. Now what else can we do from my latest videos to give us a target for this move down? We can project out this manipulation leg from the high to the low. Then we can look for the -2 to -2.5 area for a target. So let's get into the next day and see what happens. So you can see here we are building a range and we just put in equal lows. Now when we are bearish with price action, a run of an old high is an area to be looking short. So let's hop down to the lower time frames for this 9:30 open. In this case, we'll use the 2-minute. So here we are on the 2-minute chart. Let's go ahead and zoom out so you can see where we're at. We have the old high that was just tagged right there, our equal lows here, and we have a -2 to -2.5 right here. So we'll go ahead and mark that out. Zooming back in, let's see what 9:30 open does. So you can see 9:30 open, manipulated up, closed back in the range. So if I'd want to see this move down, I'd want to see a change in state of delivery or price close below the series of up close candles here. Here we get that close, validating it as a change in state of delivery. So I'd be looking to enter a short position here, my stop on this high. Now what can I do for targets? Well, I can also project off this manipulation leg here, and let's go ahead and zoom back out. Now ideally, I'm looking for targets in the -2 to -2.5, which we have some equal lows there. We have equal lows, as well as the -4 to -4.5 there, but we also have our hourly target here. I'm going to go ahead and put my target just on these equal lows here, but we'll see how these areas react. So let's go ahead and zoom back in. So here we get tagged in, pretty choppy, some displacement down, and zooming back out, there we go, and we hit the low. You can see we hit our -2 to -2.5 and our -4. Let's see if we reach for that hourly target. And we do reach for that hourly target. Now let's go back out to the hourly chart just to review this. We went from our higher time frame PD array, which in this case was a daily fair value gap. We waited for the change in state of delivery on the hourly chart, and then the next day we had a sweep of buy side liquidity, which is an area to get short when price is bearish. From here, we look for the change in state of delivery on the 2-minute chart to get short, targeting these equal lows on the hourly chart, as well as the projections from the high of the week. Now that you understand the change in state of delivery, how do I combine all of this into an entry model? Well, what I focus on is a manipulation, then a change in state of delivery, and then I focus on order blocks and fair value gaps to deliver price to projections. So let's go over a few examples of that. So you can see right here we have created a range. So let's see what happens. You can see price is failing to displace out of this range, but that is the first thing, manipulation. The next thing I look for is a change in the state of delivery, so I would need price to close below this last up close candle. So you can see we have not closed below it yet. And there is our close below, so that is our change in state of delivery. Now if I'm looking to take the first entry, I'm looking to enter here at the change of the state of delivery, or when it retests the order block, my stop on the manipulation high, which swept, and then for targets, I like to project out my targets. Now here, I have a low I can be targeting, but I can keep in mind the -2 to -2.5. So ideally, it would look something like this, targeting the -2 standard deviations. We're going to go ahead and just keep it on this low. Now we create more up close candles here and close below them. So now we have more order blocks. So if I was going to miss the first entry, I'd be looking for another entry here. There we make more up close candles. So I'd want to see this continue to support price lower. And another thing I'll do is I'm only going to be looking for entries within a premium of this dealing range here. So above this line here. You can see price is retesting that order block. And there we go, we break that initial low. Let's go ahead and mark out our -2 to -2.5. And now let's see if we can find something in the other direction. So you can see we're building a range. Now we do reach into the -2 to -2.5 and below these lows. So if this is going to become manipulation, I'd want to see a change in the state of delivery or price close over the series of down close candles here. And price does do that. So the next thing I do is I look to project out this manipulation. I look to our left. What do we have resting in the -2 to -2.5? We have an old high. So that will be my first target. So if I'm looking for the first entry, I'm looking to enter on this change in state of delivery or the order block with my stop on the manipulation, targeting this high. Now what I'm focusing on is a close over this down close candle. So now that it closed over that, it is also a valid order block. So I'm looking for that to support price. And we go reach that high, and let's see how far we go. You can see we consolidate, but we do go end up and hit that -4 standard deviations. So after cleaning up the chart a little, let's go through what I look for one more time. So the first thing is manipulation. So you can see we have manipulation over an old high before change in state of delivery. Once those two things occur, I look to project out this manipulation leg to give myself a confluence or targets. After that occurs, I look for order blocks and fair value gaps to support price lower or higher, in this case lower. And then the same thing on the other side over here, we have manipulation. Once that is confirmed by changing the state of delivery, I can then look for an entry on the order block or fair value gap as price reaches higher to these projection targets and liquidity levels. The last thing we're going